Good morning everyone. Welcome to another episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is missiles, rockets and falling debris. Brent crude prices last week went from testing US 98 per barrel to sink towards US $89 per barrel, and that reflected the wild swings in markets. Markets went from looking at US and Iran trade military strikes for most of last week to a sudden yet not surprising declaration from US President Trump that a deal is near and a signing could take place in Europe over the weekend. While a deal was certainly not signed over the weekend, this morning, the announcement of a deal between US and Iran with confirmation from both sides will mean that markets are starting the week with optimism. Specifically, US President Trump said that the deal with Iran is now complete and he is authorizing the immediate removal of the United States naval blockade. While the details are sought after for who got the better deal, markets are likely to remain buoyant on the reopening of Hormuz, especially with the rare confirmation from both sides, as well as a joint statement from UK, France, Germany and Italy to lift sanctions on Iran. While the risk for US and Iran bickering remains, conflict resumption risks remain rather tail, and a national equilibrium may well be an extended negotiation period. On the data front, US headline CPI last week was largely in line with expectations, though core inflation was marginally softer than expected, which allowed markets to trim odds of a Fed rate hike in end 2026. Subsequently, a higher than expected PPI print, though provided warnings on compressed margins and potential pipeline inflation pressures. On balance, US equities are relatively buoyant for last week. On FX, it is notable that the dollar remains bid, with the DXY still hovering just around mid-99 in sharp contrast to plunging oil prices to 3-month lows and lower USD yields. Across the Atlantic, the ECB raised rates last week by 25 basis points in a unanimous decision. The ECB flagged significant increase to service inflation, but stuck to a meeting-by-meeting guidance on policy path. Upside threats confronted EM Asia with destabilizing FX dynamics in focus last week. Bank Indonesia undertook a surprise 25 basis point hike, accompanied by discounted hedging costs for investors to encourage inflows and stabilize the rupiah. Ongoing student protests in Indonesia remain a worry for their domestic political stability. In Korea, the Korean won outperformed last week on intervention by authorities to check speculative FX trades. Looking ahead, the Fed on 17th of June has enough policy room to keep rates unchanged. Markets will be assessing Kevin Walsh's views on inflation, as well as his ability to secure wider buy-in on his perspectives and frameworks. In Asia, the BOJ may be set for a 25 basis point hike on 16th of June, though it may be a tall order for them to convince FX markets that they are far from being done. As such, we watch for fresh yen depreciation pressures, which could be subsequently met with intervention risks. In Australia, the RBA on 16th of June is widely expected to maintain a vigilant hold, striking a balance between the softer jobs and growth print, while inflation pressures remain undeniably sticky. Meanwhile, our out of consensus calls for rate hikes for Bank Indonesia and the BSP comes on the back of needing to ensure currency stability and anchor inflation expectations. For Bank Indonesia, on the 18th of June, even after rupiah gains from the off-cycle rate hike, it is imperative to further entrench rupiah stability via an upsized rate hike as external headwinds mount and domestic reforms require further progress. Similarly, in the Philippines, the BSP may be considering a jumbo 50 basis point hike as inflationary pressures are far from easing in the Philippines, with core inflation at 4.1%, though the consensus view remains a 25 basis point hike. All in, even with a US-Iran deal, the macro impact on reopening Hormuz is unlikely to be clear-cut. All in, Even as rockets are fired into space and optimism lives briefly, falling debris in the forms of inflation pressures, vaccine stability, liquidity risks, and domestic political uncertainty remains difficult to ignore. For more information, please refer to our week ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.